Well, the US has allowed the sale of Iranian oil at sea in its latest effort to counter rising oil prices due to the escalating West Asia war. The Treasury Department waived sanctions on Iranian oil that have already been loaded onto tankers through to April 19th. This measure follows similar decision on Russian oil on the water. For years, the US has prevented the sale of Iranian oil and fuels to most of the world, yet Washington is now facilitating oil sales from a country against whom it is waging a war. Analysts are calling these decisions desperate measures due to soaring crude prices to multi-year highs. The objective is clear: allow as many barrels of oil as possible to flow into the international market to improve the global supply situation and curb spiraling crude prices. The decision to waive sanctions is also targeted at hoarding. For years now, over 90% of Iranian oil exports have been going to one country, China. And technically, this move will not really increase the global oil supply. The decision will at best enable other countries also to buy Tehran's oil. In a post on X, US Treasury Secretary Scott Bessent called the waiver a narrowly tailored short-term authorization permitting the sale of Iranian oil currently stranded at sea, adding that the measure will release about 140 million barrels. But that figure includes cargoes in transit which may already be booked and not likely to reflect actual availability. Goldman Sachs estimates there are 105 million barrels of Iranian oil on water. The global market is facing a daily shortage estimated between 10 million and 14 million barrels per day. The International Energy Agency labeled it the largest supply disruption in history. The Strait of Hormuz carries about 20 million barrels per day, or 1/5 of global oil, and has been effectively blocked. In addition, major Gulf producers have reduced output by at least 10 million barrels per day. So the release of Iranian oil is at best only a fraction of the actual deficit in supply due to the war. Bessent also said that Iran will have difficulty accessing any revenue generated. At current market prices exceeding $100 per barrel, the total value of Iran's oil at sea exceeds $14 billion. However, the Treasury Secretary said that Iran will have extreme difficulty accessing any revenue generated from these sales. According to Bessent, those proceeds are expected to be held in restricted accounts to prevent them from funding Tehran's military exports. The US has continued to maintain maximum pressure on Iran's access to the international financial system, but previously Iran has managed to earn from its oil exports despite the sanctions through crypto and other forms of settlements.